Good afternoon, everyone. Welcome to our Bank Secrecy Act Regulatory Update webinar. This is a continued webinar from the webinar we did last year, and we have quite a bit of good information for you that we'd love to share. My name is Cathryn Baxter. I'm going to be your moderator for today's event. But before we go into the webinar, let's go over a few administrative announcements. So turn the volume on your computer up as loud as you need to. And also, if you want to resize the slides on your console, drag the bottom right corner. Remember that from this website, you will need to allow pop-ups. Please pay attention to the Ask a Question feature on your console. And please do ask questions throughout the webinar. We're going to try to get to as many of them as we can, but we do have quite a number of people on the call today. And as always, in approximately 3 weeks, this webinar is going to be closed captioned for on-demand viewing in our learning management system. Now, we do have an Ncua disclaimer that I must read. It says, the materials presented in this webinar are intended as an informative and educational summary of general Bank Secrecy Act information. The Ncua has taken reasonable measures to ensure the quality of the data and other information produced by the Ncua that is available in this presentation. The Ncua, however, makes no warranty, expressed or implied, nor assumes any legal liability or responsibility for the accuracy, correctness, or completeness of any information that is available through this presentation, nor represents that its use would not infringe on privately owned rights. The slides are intended for educational and discussion purposes and do not constitute legal advice nor replace independent professional judgment. Reference to any specific commercial product, process, or service by trade name, trademark, manufacturer, or otherwise does not constitute an endorsement, recommendation, or favoring by the U.S. government or the Ncua. So now that we've done that, we've got a poll question for our audience. Now, the poll question, please use the radio buttons on your screen. We just want to get an idea of how many people we have, or rather how many credit unions that we have asset-wise in our audience today. Are you in the 0 to 50 million category? 51 to 120, 1 to 50 million, 251 to 500 million, 501 to 1 billion. Are you greater than 1 billion, or are you not a credit union? We'll give you a couple of seconds to do that. Again, 0 to 50 million, 51 to 250 million, 251 to 500 million, 501 to 1 billion, or greater than a billion, or not a credit union. So let's see what everyone said. Okay, we have a pretty good mix. We have quite a few large credit unions. We also have right in the middle, we have the 51 to 250 million. We have 27%. That's our largest percentage, followed by the greater than a billion. Absolutely wonderful. All righty. So now, let me introduce the speakers that we have today. We have as my host as well, Andrew Bluedorn. He's a BSA officer here at the Ncua, the Office of Examination and Insurance. We're also pleased to have again with us Cathryn Martin. She is the Assistant Vice President and BSA Officer of Tower Federal Credit Union. And we also have joining us today Penny Lane DeJesus. She's a Principal Examiner and BSA SME in the southern region of Ncua. So we have a fantastic panel today, and this is our agenda. We're going to talk about the interagency BSA statements and rules, which include Bsa Enforcement Statement, Pep Statement, Charities Statement, Sar Exemption, FinCEN Sar FAQ, MRNG Guidance, and RFI. Then we're going to talk about high-risk accounts, and we're going to discuss the Anti-Money Laundering Act of 2020, followed by our Q&A. Also, I'd like to remind the audience at the end of the webinar, if you can do it before we get to the end, there's a survey on your console. We'd like to know what you think of the webinar and some suggestions that you might have for the future. So now I'm going to turn everything over to my host, Andrew Bluedorn, and he's going to get us started. Andrew, you have our attention.
All right, thank you, Catherine. Listed here are regulatory citations for today. I want everyone to pay attention to the link at the bottom of this page. It's for the Bsa Resources page on ncua.gov. I encourage credit unions to bookmark this page if you've not done so already, as this web page has various links to Bsa resources and guidance, and it's something that we keep updated regularly. Which brings us to our next poll question. Are you familiar with the Bsa Resources page on ncua.gov? One reminder about the poll questions, please make sure you submit your answers via the radio dials and not via the Ask a Question feature. And while we let everyone answer this poll question, I just want to remind everyone, quick way to get to the Bsa Resources page, it's just 3 clicks from the ncua.gov homepage. So first, you'd want to click on the Regulation and Supervision tab on the top of the home screen. And then second, click on the Regulatory and Compliance Resources link on the left-hand side. And then you'll see another link on the left-hand side that says Bank Secrecy Act Resources. And so 3 clicks from the home page, you can get to the Bsa Resources page. So let's see what our poll results show here. Okay, a little more than half of you are familiar with the Bsa Resources page on ncua.gov. That's great. For those of you who aren't, like I said, bookmark that page or remember how to get there through the 3 clicks, which once again is the Regulation and Supervision tab, and then Regulatory and Compliance Resources on the left, and then you'll see on the left again, Bank Secrecy Act Resources. And as Catherine mentioned, we will be discussing various BSA-related statements and rules that have been recently issued. First, we'll talk about the Bsa Enforcement Statement. Second is the Pep Statement. Pep stands for Politically Exposed Persons. Next is the Charities Statement, or Charities Fact Sheet, the Sar Exemption. And we'll talk about the FinCEN SAR FAQ. And lastly, the Model Risk Management Guidance and associated requests for information. A couple of notes for today's presentation. Throughout all these documents, because they're issued with the other federal banking agencies, they use words like customer, whereas in the credit union world, we use the word member. So I'll try and use member whenever possible, but I may be quoting the documents at times. You may hear me say things like customer due diligence instead of member due diligence. But in those instances, just know that those terms are generally interchangeable. Also, the documents use the term bank and banks, and just like the FFIEC BSA examination manual states for its purposes, the term bank also includes credit unions. And that applies to these statements as well, unless specifically noted. And then lastly, all of these documents, except for the final one, the Model Risk Management Guidance, are on the Bsa Resources page on ncua.gov, and the Model Risk Management Guidance and RFI link should be added shortly to that page. So to get started here, we'll talk about the Bsa Enforcement Statement. In August of 2020, Ncua signed a joint statement with the federal banking agencies updating the existing enforcement guidance. This guidance enhances transparency on how Ncua will evaluate enforcement actions required by statute when credit unions fail to meet BSA AML obligations, and clarifies that most issues or deficiencies are classified as isolated or technical and rarely need to be elevated to an enforcement action to require resolution. The statement also addresses how the agencies evaluate violations of individual components of the BSA AML compliance program. This includes the 4 pillars of internal controls, independent testing, a designated individual responsible for BSA AML compliance, and training for appropriate personnel. It also includes a member identification program, procedures for conducting ongoing due diligence, and procedures to address other BSA reporting and record-keeping requirements. Next, we'll talk about the PEP statement, and PEP stands for Politically Exposed Person. So in August of 2020, Ncua and the federal banking regulators issued a joint statement clarifying that BSA due diligence requirements for members who may be considered politically exposed persons, or PEPs, should be commensurate with the risks posed by the PEP relationship. The BSA AML regulations do not define PEPs. However, the term is commonly used in the financial industry to refer to foreign individuals who are or have been entrusted with a prominent public function, as well as their immediate family members and close associates. The agencies do not interpret the term politically exposed persons to include U.S. public officials, so PEPs are only foreign individuals. And by virtue of this public position or relationship, these individuals may present a higher risk that their funds may be the proceeds of corruption or other illicit activity. The level of risk associated with PEPs varies, and not all PEPs are automatically higher risk. PEPs should not be confused with the term Senior Foreign Political Figure, or SFPF, as defined under the BSA Private Banking Regulation. SFPFs are a subset of PEPs. The statement recognizes that consistent with a risk-based approach, the level and type of member due diligence should be commensurate with the risks presented by the PEP relationship. So the CDD rule does not create a regulatory requirement, and there is no supervisory expectation for credit unions to have unique additional due diligence steps for members who are considered PEPs. Instead, the level and type of customer due diligence should be appropriate for the member risk profile. This joint statement does not alter existing BSA AML legal or regulatory requirements, nor does it establish new supervisory expectations. In addition, it does not require credit unions to cease existing risk management practices if the credit union considers them necessary to effectively manage risk. Further, this statement does not and should not be construed in any way to diminish the serious national security or criminal threats posed by PEPs, including SFPFs, who engage in illicit acts and crimes, including terrorism, human rights abuses, extortion, corruption, human trafficking, narcotics trafficking, bribery, money laundering, and other related crimes. Next, we'll talk about the Charities fact sheet. In November of 2020, Ncua and the federal banking agencies issued a joint fact sheet clarifying that credit unions' compliance efforts to meet BSA due diligence requirements for members that are charities or other nonprofit organizations, NPOs, should be based on the money laundering risks of the member relationship. The fact sheet highlights the importance of legitimate charities and nonprofit organizations having access to financial services and being able to transmit funds through legitimate and transparent channels, especially in the context of responding to the coronavirus pandemic. It also clarifies that charities and nonprofit organizations as a whole do not present a uniform or unacceptably high risk of being used or exploited for money laundering, terrorist financing, or sanctions violations, and that credit unions must develop risk profiles that are appropriate for the risks presented by each member. Additionally, it provides examples of member information that may be useful to a credit union in determining the risk profiles. Which brings us to the next slide. So the CDD rule does not require the collection of the information on the bullet points on this slide. However, the following information may be useful for credit unions in determining the money laundering or terrorist financing risk profile of charities and other nonprofit organization members. So this information includes the purpose and nature of the nonprofit organization, the geographic locations served, the organization's structure, state incorporation or registration, IRS tax-exempt status, and general information about the donor base and beneficiaries and affiliation with other NPOs or governments. So as a reminder, charities serve a vital role and most are low risk, and access to banking services is critical for them to complete their good works. And as a reminder, the fact sheet does not alter existing BSA or AML legal or regulatory requirements, nor does it establish new supervisory expectations. I'll now pass it over to Penny to discuss the next few slides.
Thank you, Andrew. The BSA Sar Exemption. In December 12, 2020, the NCUA board approved a notice of proposed rulemaking that would amend the agency's Sar regulation. The proposed rule would enable the NCUA board to grant relief to federally insured credit unions that develop innovative solutions to meet Bsa Secrecy Act requirements more efficiently and effectively. The proposed rule amends the NCUA's Sar regulation to allow the board to issue exemptions from the requirements of this regulation. For requirements that are also covered by FinCEN's regulations, the NCUA will seek FinCEN's concurrence. The NCUA may also consult with state regulators and the other federal banking agencies on exemption requests. Specifically, the proposed rule will add a provision to 12 CFR Section 748.1 that will provide that the NCUA may exempt a federally insured credit union from that section's requirements. The exemptions may be conditional or unconditional, may apply to particular persons or classes of persons, and may apply to transactions or classes of transactions. Finally, the proposed rule provides that the NCUA may grant an exemption for a specified time period. Under the proposed rule, the NCUA could also revoke previously granted exemptions if circumstances change related to the factors set out above, consistent with the BSA and safety and soundness or any other imposed conditions. If the NCUA adopts this proposed rule and uses it to grant exemptions, such exemptions will not relieve a federally insured credit union from the obligation to comply with FinCEN's SAR regulation if applicable. To the extent a federally insured credit union is subject to requirements imposed by both the NCUA SAR regulation and FinCEN SAR regulation, the federally insured credit union will need to seek an exemption from both the NCUA and FinCEN. The NCUA has received comments on the proposed rule, and the comments are currently under review. BSA FinCEN SAR frequently asked questions. In January of 2021, FinCEN and the federal banking agencies issued answers to frequently asked questions related to suspicious activity reporting. The answers to these frequently asked questions clarify the regulatory requirements related to SARs to assist credit unions with their BSA compliance obligations while enabling credit unions to focus their resources on activities that produce the greatest value to law enforcement agencies and other government users of Bank Secrecy Act reporting. The answers to these frequently asked questions neither alter existing BSA AML legal or regulatory requirements, nor establish new supervisory expectations. They were developed in response to recent Bank Secrecy Act Advisory Group, also known as BSA AG, recommendations as described in more detail in FinCEN's Advance Notice of Proposed Rulemaking, ANPRM, on Anti-Money Laundering Program Effectiveness, published in September of 2020. I will now turn it back to you, Andrew.
All right, thank you, Penny. I'll finish up my section here discussing the Model Risk Management Guidance and associated RFI, so request for information. So last week, just on Friday, the OCC, the Federal Reserve Board, and the FDIC, in consultation with NCUA and FinCEN, issued a statement to clarify that the risk management principles discussed in the Model Risk Management Guidance are appropriate considerations in the context of BSA AML statutory and regulatory requirements. As well, the OCC, Federal Reserve Board, FDIC, NCUA, and FinCEN also issued a request for information, or RFI. The RFI is seeking comment from interested parties on the extent to which these principles discussed in the Interagency Supervisory Guidance on Model Risk Management support compliance by banks with BSA, AML, and OFAC requirements. The agencies seek this information to enhance their understanding of bank and credit union practices in these areas and determine whether additional explanation or clarification may increase transparency, effectiveness, or efficiency. Comments to the RFI will be accepted for 60 days following publication in the Federal Register, which once again I believe was last Friday, April 9th. So this is actually open for comment right now for the next 50 or so days. So we'll now shift gears a little bit, and we'll hear from Cathryn Martin, who's going to talk to us about managing high-risk accounts.
So Andrew, before Kathy starts speaking, I just want to remind our audience, when they're sending questions in to the panel, please address your question to that speaker. So if you had a question for Andrew, address it to them. For Penny Lane, address it to her. And our next speaker is Cathryn Martin. Please address your questions directly to her. Kathy, you're on next.
Hi, I'm Cathryn Martin. I'm the BSA Compliance Officer for Tower Federal Credit Union in Laurel, Maryland, and I'm going to talk about managing high-risk accounts. Every credit union is different, so every credit union will make different decisions about high-risk accounts and how to manage them. I'll be talking about the framework for making these decisions. Some credit unions don't even have high-risk members. They maybe have higher risk members, but this process will still apply to both types of credit unions. The fifth pillar of BSA AML program requires risk-based procedures for conducting due diligence. This means that the credit union must understand the nature and purpose of the account in order to understand what kind of activity to expect. Also, the credit union must test the understanding by monitoring the activity to ensure that the activity matches the risk profile. The monitoring can be performed based on the risk associated with the transactions and that account. So more in-depth monitoring and investigation will be needed for higher risk members and accounts. Higher risk members are identified based on information provided at account opening, information obtained through monitoring, and through triggering events, like a sudden change in activity, address, ownership, law enforcement inquiries, negative media, or SAR filings. So each credit union has strengths and weaknesses that affect the amount of risk that's appropriate. For example, a credit union with data and system weaknesses should take on less risk, but a credit union with expert staff and or automated systems for monitoring accounts could take on more risk. You should look at the products and services and your membership before deciding on how much risk to take too. An example of membership issues would be a credit union with many members who are not U.S. citizens and who live all over the world. This credit union is already handling a lot more risk from a BSA point of view than a credit union where all the members live locally and work for the same employer. Our international credit union could decide that it needs to lower its risk in some other area. This credit union could decide not to offer cash services or wires as a way to lower its risk. However, the credit union's membership might demand those higher risk services like wires because they're located all over the world. Another option for this credit union may be to invest in automated systems to closely monitor account activity as a way to lower the risk, or hiring staff with expertise in international transactions. For example, if a staff member at this credit union knows the normal and high-risk transactions in Brazil and has contacts to assist in investigating unusual activity there, the credit union would have lowered the risk and enhanced its ability to evaluate these transactions occurring in Brazil. So, some credit unions have extra staff with specialized training to monitor and communicate with businesses. This way, they reduce the risk of handling business accounts. Other credit unions lower risk by limiting the services they offer to business accounts so they have less business activity to monitor. Remember, risk levels are not static. They depend on conditions within and outside the credit union and change it as those conditions change. For example, a new, more anonymous payments technology such as cryptocurrency, cash apps, prepaid cards can add to the risk the credit union is exposed to. Accounts with this type of activity make the transactions more difficult to understand because the credit union doesn't know the other parties involved. So in summary, each credit union must decide on the amount of risk to take on as a series of business decisions to be made based on careful evaluation. So each credit union decides which accounts are within its risk appetite and which are not. Regulations don't prevent credit unions from opening accounts because they are higher risk. Regulations do require that you understand the activity, and if the activity is more complicated, you'll need the staff and systems to deal with it. We've all seen those penalties imposed on those big banks or credit unions that set up as payment processors for money service businesses and didn't have the systems in place. Another example are the credit unions. Many credit unions offer business accounts, but some do not offer business accounts to money service businesses like check cashers or companies that send wires. because the credit unions do not have the automated systems or expert staff to deal with them. Other credit unions may allow some check cashers to open accounts because the amount of check cashing is below a dollar threshold set by credit union policy. Marijuana businesses may be excluded by some credit unions as too high risk. Charities are often considered high risk, but like Andrew said a few slides ago, not all charities have the same risk profile. It's more common that a credit union would open accounts for charities with well-understood fundraising activity that's local and might refuse to open an account for a charity with activity in countries with higher risk for money laundering or in conflict regions with a higher risk for terrorist financing. The politically exposed persons, or PEPs, may be higher risk, but PEP accounts can be lower risk. For example, low-dollar deposit accounts or accounts where the only transactions are monthly transfers to pay a loan would not be a high-risk account for a credit union. Here's an illustration of the amount of risk associated with different types of customers from Appendix K in the FFIEC BSA manual. It divides customers into different groups and gives an example of the type of due diligence and monitoring that's assigned to each group. If you follow this approach, you have to start by understanding your customer so you know which group they fall into, and then how much monitoring or customer due diligence is needed. The type of customers in this illustration range from consumer accounts on the left with basic threshold monitoring to small business accounts with a requirement for extra documentation. Then the highest risk accounts include money managers and offshore and shell companies with a detailed profile and tailored monitoring required. I would love to know what the highest risk accounts at our listeners' credit unions are. Please answer the survey question. What are the highest risk accounts at your credit union? Money service businesses, marijuana businesses, other businesses, charities, non-resident aliens or non-U.S. citizens, politically exposed persons, or none of the above? I guess you can use none of the above if you don't have any high risk, anything you consider high risk, or if your high risk is a different type than one of the ones listed here. Remember, use those radial buttons to show your answer to us. I'm trying to give you a little time. I really want to see what these are, though. Okay, let's see what the results are. So it seems like most credit unions that are on today are saying that they don't really have high-risk accounts or not any of these types, or that just general business accounts are their highest risk accounts. I think that makes sense. Credit unions aren't known for being risk takers and leading edge, although we do have some people who are handling non-U.S. citizens and marijuana businesses and money service businesses. So we actually have a range, don't we? Once you've determined the risks facing your credit union, you need to decide where to concentrate your customer due diligence efforts. What new tools and procedures do you need? What additional training is appropriate? Managing high-risk accounts starts with identifying them. At account opening, make sure to ask why the account's being opened and how it will be used. Is it a consumer account, a business account, or something else? For business accounts, find out what type of business it is. Make it clear if the credit union does not open accounts for certain types of businesses. Ask what kind of activity they plan for the account. Will they be withdrawing or depositing cash, sending international wires, and why? Some credit unions request more detailed information from business accounts than consumer accounts. Once the account is open, the activity must be monitored, and when unusual activity is detected, you need to find out why it's happening. We'll review the account history and check with the branch they use, but we'll also call the member to ask for an explanation of the unusual activity. The goal is to figure out whether the activity makes sense, is suspicious, or may be criminal in some way. Customer due diligence can be performed on the member and on specific transactions. It requires that you research the parties involved, including the member, financial institutions, merchants, senders, or receivers. For example, if your account holder is a gas station, they may have large transactions with oil companies, transport companies, or snack food suppliers. If you see that activity, the transactions make sense. If you don't see those transactions, you'll need more information to understand what is going on. And you can get good information from, your coworkers who've waited on the member, other financial institutions that deal with that member, and the members themselves. It helps if you collect information at the front end about the purpose of wires or loans and the relationship between the parties and the member's occupation and business. So as I already said, contacting the member is usually the key. Generally, members will answer questions from their credit union. If they need more information about the reason for the call, you can explain that you make these calls to many members when their accounts appear on your compliance report so that the credit union can understand the activity and understand what will be normal and expected for their account. We explain it's just part of our process. Some credit unions also have specialized due diligence questionnaires that they use to collect appropriate information. Then you evaluate the information that you've gathered. Here are some examples of activity that we've investigated. If the member tells us that the cash being deposited was withdrawn from our credit union during previous months, then we go in and check the account history. And then we can't even ask them, why did you withdraw the money, and then redeposit it. We recently had members bring in more than $50,000 in cash and they stated that the planned purchase of a retirement condo had fallen through. Also, during the pandemic, members withdrew a lot of money to hold at home. This doesn't really make sense to me, but I don't consider it suspicious because a lot of people were worried during the pandemic. In another example, an account may be receiving international wires regularly. Your investigation may show that your member is a student and the funds are coming from family back home. Or the investigation may reveal that your member is conducting business with multiple international companies in a high-risk industry like shipping used cars overseas. And this finding may require risk mitigation by your credit union. At this point, what you're trying to figure out, does the new information that you've gathered make sense? Does it explain the activity? Do you need more information? Does the activity seem suspicious? Is the member cooperating and being open? Is the activity allowed at your credit union? Once you have the information, you may decide to reduce the risk you assign to the account because it's now explained and it makes sense. Or the information could mean that you adjust the risk you're associating with the account higher. Sorry, I have to refresh my access to the computer. Try it again. Good. Once you've completed your investigation, you need to risk rate the account. Some credit unions use a number scale like 1 to 3, with 3 being high risk. It's important to record the basis of your risk rating and save your supporting documents. Your procedure or policy should guide you about the appropriate level of monitoring going forward. Some accounts may be so high risk that they're monitored monthly. Others may be reviewed less often. Many credit unions monitor their higher risk accounts annually. You'll also have to decide what you're monitoring and whether you will do it with a spreadsheet, a system report, an automated monitoring system, or some combination. If limits or restrictions will be placed on the account, it's best to explain any changes to the account to the member by telephone and then follow up with a letter. If the risk associated with the account is outside the credit union's risk appetite and policies, the risk may need to be able to be mitigated with targeted restrictions. Let's say the member stated in the account opening documents that the business was not a money service business or a marijuana business, but then you learn that it was. If that's not allowed at your credit union, you could close the account because it was opened with false information. Another member is making large cash advances with a debit card and then bringing in cash to deposit to the account. If the information provided about the reason for these transactions doesn't make sense, the credit union can just take away the debit card, and this should stop some or all of that higher risk activity. We had a situation where our investigation uncovered our member as the owner of a Bitcoin ATM located at a gas station. His account was a consumer account, so there wasn't supposed to be business activity on it. What we had seen was he would deposit money orders from this gas station and then transfer large amounts of money between several banks in different parts of the U.S. Because we didn't allow business activity, much less money service business activity, on his consumer account, we contacted him to stop the money order deposits and the electronic transfers. And we warned him that if the activity didn't stop, we would close his checking account. This warning did stop the high-risk activity. Finally, you need to file the necessary SARs required by any suspicious activity. Then you start all over again, monitoring accounts, investigating activity, updating your files, and mitigating your risk to keep it within your credit union's risk assessment. It's time for another survey question, and I'm curious about how our listeners are monitoring their higher or high-risk accounts. Please answer the survey question using the radial buttons. So how is your credit union monitoring high or higher risk accounts using it? Automated monitoring systems, system reports, spreadsheets, a combination, or something else? I'll give you a little bit of time to remember, use those exciting radial buttons.
The radio buttons are exciting, Kathy.
Okay, let's see what the results are. Okay, so most people are using automated systems or a combination. And really, since all these higher risk accounts can be so different from each other, they can have different, you might have different ways that you're doing it. It all can't be covered by one system. I guess that's the end of my section of the presentation, so I'll turn it over to Andrew.
All right, thank you, Kathy. Right now, I'll discuss briefly the Aml Act of 2020. So in December of 2020, the Aml Act of 2020 was passed under the National Defense Authorization Act. The Aml Act of 2020 has been referred to as the largest reform to BSA AML regulations since the USA Patriot Act in 2001. As we speak, FinCEN, Ncua, and the other federal banking regulators are working on implementing various aspects of the AML Act. With the AML Act being over 80 pages, we're not going to come anywhere close to covering all the details in this webinar today. But I will share a few highlights of the Act. So the Act improves coordination and information sharing among the regulatory and law enforcement agencies tasked with AML CFT compliance. So AML, anti-money laundering, CFT, counter-financing of terrorism. So the Act reinforces a risk-based approach to AML CFT compliance. The Act modernizes AML CFT laws and clarifies FinCEN's authority to regulate virtual currency. The Act encourages technological innovation by financial institutions to more effectively combat money laundering and terrorist financing. And the Act expands the responsibilities of FinCEN in various ways, including a requirement to establish a beneficial ownership database. This part is known as the Corporate Transparency Act that passed under the National Defense Authorization Act with the AML Act of 2020. Like I said, FinCEN, Ncua, and the other federal banking regulators are working towards implementing the changes required by the Act, by the AML Act and the Corporate Transparency Act. So today we covered various BSA statements and rules. Kathy discussed managing high-risk accounts, and then we gave a brief update of the AML Act of 2020. I'll now turn it back over to our moderator, Cathryn.
Thank you very much, Andrew. And we are getting ready to go into our Q&A. I want to remind everyone, please fill out the survey that's in the survey widget on your console. Here's the contact information for our BSA experts, Andrew Bluedorn, Cindy Johnson. There's their email address if you want to contact them. and I'm with the Office of Credit Union Resource and Expansion, CURE. This is our contact information. As we mentioned at the outset, information of this webinar, of course, is going to be posted in our learning management system in approximately 3 weeks, so you will be able to get that information. You can actually download the slides now if you'd like in your resource widget, but you'll be able to view this webinar again if you'd like. And now I'm going to turn it over, our Q&A, to Janelle Porter. She's going to handle that. Janelle, it's on you.
Thank you, Cathryn. The first questions today will be for Kathy. So the first one, Kathy, for you is how many staff do you have in your compliance department at Tower?
Well, my department is a combination of fraud and BSA, and it's 5 of us all together. So it's not a big department. But we just do BSA, OFAC, and fraud.
Thank you, Kathy. One question that we are getting is regarding account closures due to risk. Do you tell members in a termination letter what the actual reason is for the account closure?
We are pretty straightforward or open about what is going on. We don't really allow business accounts at all at Tower. There are a few that are grandfathered in for particular reasons. So if we see somebody like that Bitcoin ATM person, we contact him and tell him, we ask him first, what is going on. And then when we find out, we say, this is a consumer account, you're not allowed to do business on it. And we don't have any hesitation to close checking accounts because you don't have a right to a checking account. So we'll send them a warning letter. We'll talk to them to make sure they really understand what we're saying about it. And then pretty much if it doesn't stop, we'll give them some kind of deadline to get it, to not happen anymore. For closing accounts, if a person opens an account with a false identity, you're allowed to close it because it was never really opened for that real person that you thought you were opening it for. And that's the way we look at it with these situations where an account, if you were asked, is this going to be a business account? They say no, and then it is a business account. Or if you say what kind of business, and they say, you have them on your application, ask, is this a marijuana business account? And they say no, and then it is, well, then that was with false information too. So I think that's false information. You're allowed to just close it, but you could always just expel them if you, wanted to cover your bases.
Okay, thank you for that. Andrew, the next question is for you. We've received a few questions regarding the FinCEN database that's being created on beneficial ownership. Do you have any other details you can provide about what the timeline might be for that or anything else related to that database?
I don't have any details to provide on the timeline, but I can just say that as part of the Corporate Transparency Act, FinCEN has been tasked in the Act with creating a beneficial ownership database, essentially where every company that's registered would then have to register with FinCEN and identify who the owners are. And so don't have more details as of right now aside from what's in the Aml Act of 2020, but keep your eyes peeled for information from FinCEN on that.
Okay, thank you. Kathy, the next question I think is for you. What are your thoughts on specific amounts of money being asked for to use at account opening, and in terms of expected account use and what people are telling you the account is going to be used for? Are ranges okay, or is it necessary at all to even outline what those might be?
So my position on this is that for consumers, they don't really know what they're going to do. So that information may be helpful in the first 6 months or something of having the account, but they don't know that they're going to have to put a new roof on their house or something and, you know, be moving a lot more money or sending a wire to the builder or whatever that they didn't realize was going to happen. But, and I think ranges are fine. They might as well just tie to your policy on what you consider high risk. If you say, well, up to 3 wires a year, I'm not going to consider that high risk, well, then if you ask the person, are you going to send more than 3 wires per year, then, you know, a range like that would make sense. So I think it's fine to use ranges and to, you know, keep it somewhat flexible, because really over time, the key is what are they doing? If they say, I'm going to send 10 international wires per year and then they don't send any, does that seem high risk? Not to me. It's really even if they say, I'm going to send 10 international wires, you know, per month, and then they do it, you want to know why. What's going on? So the transactions are the key. The information at the beginning may just help you by answering some of your questions in advance.
Okay, thank you for that. Andrew, the next question is for you. We've received a number of questions in regards to the Sar Exemption rulemaking. Can you provide a few examples of when that might come into play?
Yeah, thanks, Janelle. One example of when a Sar exemption could come into play, let's say a credit union is filing continuing Sars on either a specific business or a group of businesses that they've lumped together in a risk category. And let's say they are filing the Sars because they feel like they need to comply with the regulation, but they don't actually suspect any suspicious activity. You know, they could, if this proposed rule is passed and adopted by Ncua, they could then petition to Ncua and FinCEN to be exempt from filing SARs on that person or on that group of people based on the activity and what they believe is going on. So one more thing I'll say about the SAR exemption is, as we noted, it is just a notice of proposed rulemaking that was open for comment, and the comment period recently closed on that. And so we have the comments back, you know, from industry that we received, and we're reviewing those comments. And if we are to adopt this rule, there would be guidance that would come out with it, most likely, that would include further examples on when the SAR exemption could be applicable to credit unions.
Great, thank you. Okay, Kathy, the next one is for you, and it regards negative news media monitoring. Do you have any sources that you could provide or framework expectations that credit unions could reference in regards to negative news media monitoring?
So we don't use a vendor. There are vendors that track negative news, and I think it would depend on your membership. If all of your members, or many of them, are international diplomats, it might be worth it for you to pay for negative news. But otherwise, you know, you might decide we just don't have that many high-profile people at our credit union. Still, you can just monitor in the regular news. Often when we see some horrible story about, you know, somebody in our local area arrested as an embezzler from their work, I, you know, run into work and Google, like, does that, you know, look up that member, that person to see, I hope they aren't a member here, because I don't want to see that they've been bringing in all the embezzled funds to us. So you can just keep track of your local news stories too. So it's really, I guess it's going to be a decision you make based on what you think your membership is like and what they're doing. Maybe even past situations, if you found out that your members were involved in something and you had no idea about it and it was in the news, then it might be worth it to get one of those services.
Okay, thank you. Andrew, the next question is for you. Are credit unions able to advise law enforcement if they've filed a SAR or provide any details that they listed in the SAR to law enforcement if they have specific concerns?
Yes, Janelle, thank you. The regulation does allow, and FinCEN guidance does allow for credit union to notify law enforcement, whether that's federal law enforcement or local law enforcement if needed, of a SAR. And they are able to then share details because law enforcement does have access to that SAR. The only things I would caution there, a couple of things. One, just make sure whoever you're talking to is law enforcement and that you're contacting them. I have heard stories of, law enforcement walking into a bank or credit union, or sorry, someone who was pretending to be law enforcement walking into a bank or credit union saying they wanted information. In a situation like that, just make sure you know who you're speaking to and know who you're given information to. And then the second thing would be, even though, yes, you are able to contact law enforcement and notify them of a SAR, generally I would not think that's needed. Every SAR is going to be reviewed by someone on a SAR review team in your geographic area. And so if something is time sensitive, there are applicable times where you would want to contact law enforcement. But in general, I don't foresee most credit unions needing to contact law enforcement on most SARs.
Thank you. Kathy, the next question is for you. We received a number of questions from credit unions about due diligence. Do you have any sample questionnaires or other references or things that you might be able to point people to help with their customer due diligence?
I'm sure there are articles, and you could look on, find things online, samples that different credit unions use. We don't really ask very much of our consumer accounts, just the CIP, where they work, and how they were eligible for membership, I think are the key items there. And then, but for businesses, we'll ask, what's the purpose of the business? We'll ask for their organizing documents, or at least if they're, very informal, some description of what the purpose of their organization is, like a bowling league or whatever it is, who they believe the members are, like a list of the membership, and then we try to evaluate it, because one of the things we're looking at is it a business, because we don't really open accounts for businesses, so we have to see that it's some kind of nonprofit or other kind of organization. But we have had situations where we have to contact a member and ask them due diligence questions. I had this member who was withdrawing a lot of cash, and we couldn't really figure out what was going on or what he did for a living. He didn't seem to have direct deposit or anything coming into his account. And it turned out that he would travel all over the country and even to other countries and go to conventions where they traded trading cards and collectibles, things like that, and buy and sell those items. Well, when I just saw that activity, there wasn't really like a set of questions I needed to ask him. I needed to talk to him about the transactions I was seeing, and then follow up as he told me about things that I didn't know anything about these conventions. So, ask him what kinds of things and how long he was going to continue this. Was this his main source of income? Things like that. So I think you can use something that maybe others have prepared, but you're always going to end up. You need to be flexible. Also, there's even software systems that have built-in questionnaires that sometimes, even have follow-up questions built in, so that if the person answers no to something, then you don't get presented the follow-up questions, then, you go down the other route and things like that. So your vendors may have something too.
Okay, thank you for that. Andrew, the next question is for you. As it relates to PEP, is there a particular list that credit unions should be using to compare against their member base, or what would the logical approach be to identifying PEP?
There is no magical PEP list out there, if that's what someone's looking for, but there are ways to scan your membership for PEP. So one thing is a lot of credit unions are going to, only serve their FOM, their small FOM, in their small geographic area, and so the odds of them, serving a PEP are rather low. But if they know of any politically exposed persons that might live in their area or could be part of their membership, they're encouraged to look for that. But there are databases out there. There aren't any I'm going to name by name or recommend, but if you do some searches, there are some databases out there that will alert you to people that are potential PEPs or other politically exposed people.
Thank you. And Andrew, the next one is for you too. There's some questions coming in about the recently passed Aml Act. Can you provide any additional resources for credit unions about the Act, and just in terms of like a depth perspective and what's to come?
Yeah, for sure. So as far as what credit unions can expect to see any changes, in the immediate future, there's going to be very little for right now. When I say right now, maybe the next couple of months. But if you go to our Bsa Resources page, there is a link on there to our press release of the Aml Act. There should be a link to the actual act. If not, it's planned for the next update and will be on there. But you can also go to FinCEN's web page and see what they've posted about the act. And it kind of you can get a rundown by reading through it of what's required, when it's required, and what might change. So for example, with the beneficial ownership database, while this is not official, there's hope that because FinCEN, will establish this beneficial ownership database, that then credit unions won't have to determine the beneficial owners on all the accounts that they open going forward. So it might provide some relief to credit unions on that front. And as I mentioned earlier, with the Act being over 80 pages, it's hard to cover all that right now. But I believe FinCEN has a summary on their website. And like I said, you can find the full 80-plus page Act out there. But credit unions, stay tuned for anything coming out of FinCEN. And if anything, of course, major changes with credit unions, you'll also hear a notice from Ncua on that.
Thank you. And we have time for, I think, one last question today, Andrew. This one will be for you. Is there any services for credit unions that are free in reference to BSA compliance-related questions? And I think what they mean is specific questions rather than broader guidance from agencies. Is there anything else that you can think of or recommend?
I mean, there are, like I said, the resources that we post on our website, which also includes a link to the BSA, the FFIC BSA AML manual. I'm not sure if Cathryn wants to chime in to say if CURE has any resources. Our Office of Credit Union Resource and Expansion might have some things available, but I don't want to speak for her. But one thing I have seen a lot of smaller credit unions do as far as BSA resources and otherwise is contact mid-sized to larger credit unions that are in your area. And oftentimes, those mid-sized and larger credit unions, they really do enjoy helping out the smaller credit unions. And then also you can reach out to your Ncua examiner, who should be able to provide you with some BSA resources that you need.
Great. Thank you so much. All right. Well, with that, we will close out the Q&A. We are at the end. So, Cathryn, I will turn it back over to you.
Thank you, Janelle. To answer part of Andrew's question, if the credit unions would like to take a look at our learning management service, we have a course on BSA, and we have another webinar that we did for BSA. So we have a couple of items there that might be of assistance to them, and certainly that's a free service to credit unions. But we want to thank you all for attending the webinar with us today. We are fresh out of time. I'd like to thank Andrew Bludorn, he was my host, Cathryn Martin from Tower Federal Credit Union. Thank you, Kathy. Also, we have Penny Lane DeJesus. She joined us today. Thank you so much, Penny. We'd also like to thank Janelle Prepare for helping us on the back end with the Q&A. George Kudwa was assisting Janelle as well. And then we'd like to thank Franz Ayento, he's our behind-the-scenes guy, and Andrew with On24 for assisting us. Thank you all for joining us today. Please join us next month. We have a cybersecurity webinar that we're going to present. So we'd like to wish you all a great afternoon and a wonderful week.